Good evening, 2059, 26th of February 2022. And today I have a very interesting video for you. It's weekend, so markets are sleeping now. And we will check Ethereum and Bitcoin very soon. But I just wanted to show you one video on YouTube from Alessio, who I'm following for quite a long time. I would say like 2 years. And he's very precise in analyzing what is coming in the market. I follow his advice a lot. And so I wanted to just uh, give you a little bit of a insight what he's talking about and why he's thinking then that the uncertainty which is now caused by Russia can spike something. So I just wanted to show you the video and let's listen to what he has to say.
Is chaotic and unpredictable, this explains why the markets are also chaotic and unpredictable. Okay, let's go back to the charts now. This chart is courtesy of Jason Geppert of Sentiment Traders, a fascinating chart. It's called the Equity Market Related Economic Uncertainty Index. It's a mouthful, I know. Let's just call it the Uncertainty Index. It shows the level of uncertainty in the markets for the past 4 decades. Now, pay close attention to the blue line here, which shows the spikes in uncertainty. Notice when the blue line goes above the 500 level. Here's the 500 level on this chart. Okay, now look at the spikes here when the uncertainty goes above 500. That's the red line you see in the chart. For those of you who want some context, I've also labeled for you on the chart what was happening around the time of each signal. For example, take a look at this spike over here in 1987. That was Black Monday when the stock markets had a severe crash, a massive spike in uncertainty, as you can see here. Same happened after the crash in 1998, another spike 10 days after 9/11, then another one in 2011 during the Eurozone crisis. Then the most recent one happened at the start of the COVID pandemic in March 2020. Notice the spike over 500. And now the most recent one around the time of the Russia-Ukraine crisis, a spike in uncertainty. Okay, now look at this data over here, also courtesy of Jason Geppert. Notice what happened after each of these signals. In other words, what happened after the spike in uncertainty over the 500 level that we saw there. You will see that in the short term, so in the next couple of weeks or month, the results were actually quite mixed. Some were positive, some were negative, a lot of volatility overall. Now, here's where it gets interesting. Look at the returns in the stock market for the next 2 to 3 to 6 months. Notice that the returns or results for the next 2 to 3 months were very positive, with a median return of 14 to 18%. And 6 months later, it was still good. The return was 17%. For example, in 2020, 6 months later, the stock market was up 44%, as you can see here. So how do we interpret these results? Well, here's...
Yeah, so I just wanted to show you this part, and yeah, I didn't check yet. This is the new video from today. I was not familiar with this. And Alessio's a very smart guy, and he knows what he's talking about. So if this is true, and we saw the bottom, which would be here, and we would now see the recovery, we see a higher bottom, which is a good sign always. Now we need to see higher high, which would be here, of course, here or here. We need to break out back into the structure, break up this resistance which lies now here, turn it into support, and then fly away. Yeah, 50% if he's right, so 44% from this momentum, let's say 2.5 thousand, would mean 4,200 in the next 3 months. So somewhere in May, we will be 4,200. What will happen after that, we don't know, but yeah, Alessio, as I said, is a very smart guy. I trust what he's saying, and we will see if this is true or not. But yeah, I just wanted to show you today his video. Check it out. He's on YouTube. Very great guy. He has great videos, and yeah, just check him out. And yeah, I just wanted to show you that today. The uncertainty index could be very important. Thank you, and see you tomorrow.